It's time for another stock review, this time Aurora Innovation, ticker symbol AUR. In this video, we're going to look at what Aurora Innovation is. We're going to look at a full back test, comparing it to the S&P. We're going to look at the inside trading, who's buying it, selling it from the inside, latest news, the sentiment of the stock, the margins, the balance sheet. Should we buy into this stock? The intrinsic value, everything around the stock, and to make an informed decision of whether we should invest in this stock. So let's get straight into it. If you are one of my members, I will do a full review for you as well. So to tap the like button, subscribe, and ring the bell, and let's get straight into it. We are going to start very basic, and then we're going to head down. Some people have said to me, it's very basic. Well, they haven't watched past the first couple of minutes, because as we go down the list, it will get a bit more detailed. Okay, so and we'll go in very deep at the end of the video. All right, so first of all, we're going to give you a little preview of what you're going to see. We are going to take a look at the website. It's important. We like to review the website. We like to know what the website looks like and how they communicate with their shareholders. We are then going to go through and we're going to look at the revenue of the company, the balance sheet of the company, the debt position, the efficiency, the ratings, all of this stuff we're going to do. Wall Street analysis, much stuff there to cover. So we'll be doing that. We'll also take a look at the back test. This is how we compare it to the S&P to get an indication of how it trades. This is our back test software. We'll look at that in detail. All of that's coming up over the next few minutes on this brand new stock. So first of all, what is Aurora Innovation? What is Aurora Innovation? You may have never heard of it before. I haven't until today, and it's a great pleasure to be able to take a look at something new. This is how we learn. All right, let's get straight into it and let's see what we have. Aurora Innovation, what is it? Well, first of all, Aurora Innovation engages in design, development, and automobile software, hardware, software, and provision of data services. It primarily offers Aurora Driver, which allows a vehicle to drive itself. Okay, now remember, once I've made these videos during a live event, they will go out as their own video, and the Aurora stock community will find it. So if you want me to make a video for you, become a member and I'll do it for you as well. Okay, all right, now then, the CEO, Christopher Urmson, employee 1,700, Pittsburgh in Pennsylvania, founded in 2017. Regarded as high risk, it has a maintenance requirement of 100%. The lowest is 25, so it's regarded as a high volatile stock. Market cap is $3.2 billion. It loses money at price to earnings ratio. So what you're paying to the earnings ratio is negative $2.83. No dividend, simply a growth stock. It's been around since 2017. So have we hit the S curve yet? That's when a stock buys and rallies and then smooths off the top. Have we hit there yet? Let's have a look at it. Let's have a look at the basic chart. We are going to go into much more detail in a minute. We're just starting basic. As you can see, IPO'd here, did a big pop. We don't get that anymore. IPOs don't do this anymore. The last year or two, they don't. Back in 2020, after COVID, 2021, they were still doing it. We don't like IPOs so much anymore. This, to me, looks like a SPAC. It looks like a SPAC because it opened at $10. As you can see here, it opened at $10. That's a special purpose acquisition company. It may not be, but it may just be a coincidence, but I don't think so. Looks like a SPAC anyway. You remember the SPAC king? I forget his name now, but anyway, Chamath, there we go. And it can actually bring problems for a stock. It's why Virgin Galactic and has had so many struggles from the way it was set up. Anyway, then we have this explosion here. And up it goes. This is probably when it went from, it probably converted here. That's probably what happened here. I'd need to go and check that. It popped to 17.11 and now it's been trading all the way down, and it found a bottom around 144 and a little bit of a rise here, and now it's fallen away again down to the under $2. Now, to be absolutely clear, any stock under $5 is a penny stock. So anything under 5 is a penny stock. Typically don't like those, even though we've got a few of our own. We don't like them. They're not as stable and much more volatile and so on and so forth, much more risky. Anyway, let's look at the earnings since Q1 22. The estimates we've had Wall Street. Remember, Wall Street set the estimates, not the company. We had a beat here in 22. We had a beat in 22 Q4. Q1 looks about we met expectations. Then we missed expectations in 23 Q2, and the most recent one we beat. But it's been pretty much going sideways, not really growing, not making any money for a while. Now we want to come on to capital investment in a minute and see if it's because they've been investing in capital or they're just not being able to turn a profit. There is a big difference. If we've got high capital expenditure, we can live with that because it means the company are investing. If it's just going sideways because it can't make profits, hasn't got any customers, then maybe it's not really much of a company. Right, let's see who's investing in it. That's important. That gives us sentiment on the company. Open Door, I'm not too familiar with that one. So far, I don't like it. The CEO doesn't even seem to know when when the rates are going up or down. We've had that discussion before. Rivian, that's not very good. The company loses money. Lucid draws a very aggressive fake audience who try to promote false news. I've identified many times. So far that's not good because it draws a negative sentiment to the stock if negative sort of people are investing in it. Anyway, very volatile stocks. So I don't like that. Let's have a quick look now at the website and how it looks and how it presents to the investor. Remember, a website isn't just there to sell the companies, sell the products, also there to speak to the investor. So have a little look. This is Aurora. We get a flavor of what Aurora is all about. Aurora Freight is on the horizon. Let's have a little look. 2024, Aurora plans to launch Horizon, the first autonomous service powered by the Aurora Driver. Is this like self-drive, like Elon Musk, Tesla? Designed to bring safety, value, and efficiency to carriers and fleet owners. The future of transportation is here. At Aurora, we believe that the benefits of self-driving technology will increase efficiency and mobility while bringing a reliable driver supply and heightened safety to America's roads, a safer world where goods never stop moving. Interesting stuff. The Aurora Driver. Let me just zoom in a little bit so you can get a clearer indication if I can. That won't let me, for some reason, zoom in. Bit strange. I apologize, it's quite small, but for some reason, it won't let me zoom in. So I'll just have to keep looking the wrong way for the moment as I look on my spare screen. I do apologize. The core of our technology is the Aurora Driver, our continuously improving intelligent autonomous driving system. I have to say, this is news to me. I don't know if any of you agree. I thought the fully self-drive was only Tesla. Here we have a semi, a truck, a delivery vehicle that is fully self-drive. I didn't know that this existed outside Tesla. In fact, in the chat right now, did you know about this company? I've never heard of this. I thought only full self-drive was for Tesla. So this is quite interesting. Anyway, let's have a look. A fusion of different sensors types ensures the Aurora Driver leverages the best of all worlds, seeing in a wide range, even in poor weather conditions. At the heart of this perception technology is our first flight LiDAR, which extends our visibility. I only know what this is because Elon Musk doesn't use it. He prefers cameras for full self-drive. Interesting stuff, which extends our visibility to 400 meters down the road. Seeing at this distance allows for quicker reaction time and safer motion planning. I have to say, I didn't know. Did anyone know this? Did anyone know that Aurora Innovation is a delivery vehicle with full self-drive? This is very interesting to me. I like the idea of trucks delivering their goods. I think this could be a very profitable business. Anyway, let's go back to the next part of our review. And let's see, wait for your replies. Let's see, and see if we get anybody in the chat mention that to me. Right, now we're going to go into details of the stock. Let's go straight in. Here we go. Now then, I can see we've got a few warnings coming up here, so this will be interesting to see what we get here now. But anyway, let's carry on. Right, what we've got now is first of all the value and intrinsic value. Now, very, very important to look at this, but we have to understand how to read it. In a best case scenario, we're overvaluation by 88%. This is regarded as massively overvalued at the moment. Doesn't necessarily mean that. We'll cover this in a minute. Best case. The base case is 92% evaluation. Worst case scenario, 90%. As you can see, this is all over the shop right now. But we need to read the warning to you. This is important. Persistent overvaluation detected. What does that mean? So when you look at a valuation of the company, you need to understand this. We run this through the most advanced algorithmic software, which I can give you access to at the end of this video if you stick around. Persistent overvaluation detected. Historical valuation indicates this stock's market price has continuously exceeded its intrinsic value. This ensuring overvaluation may be indicative of market overconfidence or non-fundamental influences. Explore beyond the financials to understand the valuation discrepancy. As we've always said, you cannot just buy a stock because it says it's overvalued or undervalued or whatever. This does not necessarily mean it is overvalued, but that's how the system is set up. Okay, let's move on for a minute. Let's look at the fundamental analysis of this company. 2.4 million revenue. Obviously, it's a very, very small company, and that was back in March. Fell to 5 million in June, and we've had no revenue or negative revenue, or nothing at all now. Not even projected. That would concern me. Got no information of what anyone even thinks about the stock. We just zoom in there. You can see our last report was June. Since then, there's nothing. There's 263, 553. It's so small, it doesn't even register. 800,000. I mean, it's like I earn more than that doing my show. I'm only joking. Operating income. It's down 1% over the last range, and operating income is negative 835 million. Net income is down 897 million. It's not looking too favorable right now, but let's carry on going a minute. Balance sheet decomposition. Let's look at the balance sheet. The balance sheet looks relatively okay. 2.4 billion on assets, where we only have 220 million on liabilities. So the balance sheet is okay. Let's look at the debt situation. Current liabilities 91 million, accrued liabilities 91 million. No long-term debt, no debt there. Just regular current, accrued liabilities 91, non-current 129, other current liabilities 129. Okay, let's move on down. The efficiency of the company. Well, of course, it's not making any money. It has no margins, no gross margins. It's losing money everywhere you look. It's not making any money. However, it hasn't got any debt. We just looked at that. There's no real debt or liabilities, hardly anything at all. The company's very strong. It's got a good balance sheet. It's got plenty of cash on hand. It doesn't mean it's going to make any money. It just means it can run forever until it runs out of money, effectively. That's what we're saying here. If we go down and look at it, we can see that now. Profitability score, I think that's our lowest one, isn't it? I don't think we've seen lower than 14. Somebody might tell me in the chat if we've seen lower than 14. 14% profitability score, not too great. I think you'll agree. It's just not making any money. However, it's got no debt, loads of cash. 78% solvency. It's not going bust anytime soon or at all. But just because you've got a big bag of money doesn't mean you can turn that money into making more money and then have shareholders. So it's not going to go bust. You've got a good run, but will it just eventually run out of money? At the moment, it's not doing anything, but it's a new business, right? We've got Wall Street. What do they say? Well, they give it price targets. Wall Street price targets over the next 12 months of a 252 upside at the best case scenario, 120% on the average, and 21%, which does beat the S&P on the worst case scenario. That doesn't mean to guarantee it's going to happen, but nevertheless, that's the lowest, says Robbie Cooper. Yes, I don't think we've seen lower profit than that, but anyway. That doesn't mean to say it's not going anywhere. When I started my YouTube business for the first year, I'm spending money. I've got a cash balance. I can fund it. So my solvency would be 100%. I was never going to go bust, but my profit was zero. I worked for free. So it's the same thing. You've got money, you can run the business, but you've got to at some point make a profit. Otherwise, certainly not going to get any investment from anybody else, right? Okay, competitive landscape. You can go and check that out for yourself if you'd like the link to my review, and you can do that yourself. Ownership, right now, we've got some selling of the company. The last transaction was 18th of September, a couple of months ago, by Anderson Sterling, the director, who sold $1.4 million worth of shares. Nothing too big, I would imagine, but just give you an idea. That's what was sold. Nothing bought recently. Okay, let's move down and look at some latest news. I can tell you now, the news isn't worth sharing. It was over 3 months ago, so there's no real point looking at that. Over the last 90 days, the sentiment. This is the news around the stock, and we pick the software we use here picks up negative, positive, and neutral news to give us a flavor of the sentiment of the stock. Positive news over the last 30 days, hardly any negative at all. 90 days, I apologize. Over the last 30 days, neutral and positive. 7 days, we've had no news, nothing to report. I've not seen that before. We have no news over the last 7 or today, no news to cover. Shall we look at the short interest? There is some short interest here of 6.91%. Anything above 20 is regarded as excessive, potentially starting to move into short territory, short squeeze, but you're not going to short squeeze until you move up from there, getting volume, and GameStop was around 100%. So we do have a short position against it. If you look at, give you a comparison, things like Apple and Google, they can be less than 1%. So there is some short interest, but it's not excessive. It's a lot, but it's not regarded as excessive. Okay. And in a company like this, the shorters jump on it because, everyone's trying to find the next thing that's going to crash. I don't live in that world, but some people do. Okay, the final thing we want to do as we draw this review to a close is we want to look at a back test. Because if you are going to invest, you have to know, well, could I have got more money elsewhere? I am interested, and I'm going to do follow-ups to this because I didn't actually know that there was another company doing full self-drive. I thought that was Tesla. I thought that was it. So this is really great. So thank you very much for Francisco R., one of our members, bringing this to our attention. Really appreciate it. Excuse me. Really appreciate it. Okay, so now then, we want to look here. On 2022, unfortunately, that's as far back as we can go here. We put $10,000 in the S&P and $10,000 in Aurora. $10,000 in the S&P would be now worth $9,000. We're down 10%. Whereas Aurora, your 10,000 would be down to 1,500, so you're virtually 85% gone. But there you go. There's not enough information there to just show us anything. You can see there's more volatility with Aurora. Aurora is the blue line, but there's not too much there as the history isn't that great. But I have to say, I like the idea of this. I like the principle of it. It sounds very exciting. So there is Aurora Innovation. If you would like a full review like this, sometimes I'll go into much deeper depth. This one, there wasn't as much to look at, but I will do a follow-up review because of that and try to find more information on the self-driving benefits and comparisons to Tesla. Anyway, click above my head for the review. For more information, and in the description, both above my head and in the description, you'll find the links to my software that I use and resources. My members can all get a free plan of this software. You can set up a plan and do your own research, but it only gives you a couple of stocks and review. If you want the full plan and the premium version, my members will get a lifelong discount, and my membership will be free for the discount that you obtain on this. Or you can you don't have to be a member, and you can set up a plan as well, and you can do that as well. I'll give you the links to all of that above my head and in the description, and you can go and check all this software out and have access to it. Over here, you'll see more videos in the series. I do a full playlist of all my reviews, and you can go and check them out, and there'll be updates if things change and so on and so forth. That's it from me as always. Until next time, take care of yourselves and each other.